The US is one of the largest and most diverse economies in the world, offering a wide range of investment opportunities for both domestic and foreign investors. However, the US economy has faced many challenges and uncertainties in the past few years due to the COVID-19 pandemic, the presidential election, the trade war with China, and social unrest. How can investors navigate the complex and dynamic US market and find the best investment opportunities for 2024? In this video, we will explore some of the most attractive and promising investment options in the US, covering different asset classes, sectors, and risk profiles. Number 1, high-yield savings accounts. A high-yield savings account is a safe and liquid option for earning interest on cash deposits. Unlike a regular savings account, a high-yield savings account offers a higher annual percentage yield, APY, the amount of interest earned in a year. A high-yield savings account is ideal for investors who want to preserve their capital, have easy access to their money, and avoid the volatility of the stock market. However, a high-yield savings account also has some drawbacks, such as lower returns than other investments, inflation risk, and fees and restrictions. To invest in a high-yield savings account, investors need to open an account with a bank or a financial institution that offers this service and deposit a minimum amount of money. Some of the best savings accounts as of December 2023, according to Bankrate, are offered by Capital One, American Express, and Popular Direct, and they offer annual percentage yields between 4.30% and 5.40%. Number 2, funds. A fund is a diversified portfolio of stocks, bonds, or other assets that can be passively or actively managed. A fund is a collective investment vehicle, which means that it pools money from many investors and invests it in a basket of securities that follow a certain strategy, objective, or theme. A fund is beneficial for investors who want to gain exposure to a broad market, sector, or region, reduce their risk and cost, and delegate their investment decisions to a professional manager. However, a fund also has some drawbacks, such as lower returns than individual securities, management fees and expenses, and lack of control and transparency. To invest in a fund, investors need to buy a share or a unit of a fund from a broker or a platform that sells funds and pay a commission or a fee. Some of the best funds as at December 2023, according to Bankrate, are Fidelity Zero, Large Cap Index, Vanguard S&P 500 ETF, and SPDR S&P 500 ETF Trust. Number 3, semiconductors. Semiconductors are a key component of the technology sector that powers devices, machines, and networks. Semiconductors are materials that can conduct or resist electricity, depending on the applied voltage. Semiconductors are used to create chips, circuits, and transistors that enable the functioning of computers, smartphones, cars, robots, and the internet. Semiconductors are appealing to investors who want to invest in the future of technology, innovation, and connectivity, and benefit from the growing demand and supply of semiconductors. However, semiconductors also have some risks, such as higher competition, higher cost, higher regulation, and more vulnerability to cyber attacks and trade wars. To invest in semiconductors, investors need to buy a share of a semiconductor company or a fund that invests in semiconductor companies and pay a commission or a fee. According to NerdWallet, some of the best semiconductor funds as of November 2023 are VanEck Semiconductor ETF, iShares Semiconductor ETF, and Invesco PHLX Semiconductor ETF. Number 4, clean energy. Clean energy is a fast-growing sector that produces and delivers renewable and low-carbon energy sources. Clean energy is energy that comes from natural and inexhaustible resources, such as solar, wind, hydro, geothermal, and biomass. Clean energy is desirable for investors who want to invest in the transition to a greener and more sustainable economy, society, and environment, and benefit from the increasing demand and supply of clean energy. However, clean energy also has some challenges, such as lower reliability, lower efficiency, higher cost, and more regulation and competition. The recent surge in clean energy is a relatively fresh development, and it's challenging to foresee which companies will stand out. Instead of attempting to predict the individual winners, consider investing in clean energy exchange-traded funds, ETFs, to obtain broader exposure to the entire industry. Some of the best clean energy ETFs as of December 2023, according to NerdWallet, are SPDR S&P, Kensho Clean Power ETF, Invesco Solar ETF, and First Trust NASDAQ Clean Edge Green Energy Index Fund. Number 5, CDs. A CD or a certificate of deposit is a low-risk option for locking in a fixed interest rate for a specified period of time. A CD is similar to a high-yield savings account, but it requires investors to commit their money for a longer term, ranging from a few months to several years. A CD is suitable for investors who want to earn a guaranteed return, have a specific savings goal, and do not need immediate access to their money. However, a CD also has some disadvantages, such as lower returns than other investments, inflation risk, and penalties for early withdrawal. To invest in a CD, investors need to open an account with a bank or a financial institution that offers this service and deposit a minimum amount of money. Some of the best CDs with high rates as of December 2023, according to Forbes Advisor, are offered by Connexus Credit Union, First National Bank of America, and Quantic Bank, and they offer annual percentage yields between 3.91% and 5.30%. Number 6. Bonds. A bond is a way to lend money to the government or corporations and receive regular interest payments. A bond is a fixed income security, which means that it pays a fixed amount of interest at a fixed interval, usually every 6 months or annually. A bond is appropriate for investors who want to generate a steady income, diversify their portfolio, and reduce their risk exposure. However, a bond also has some limitations, such as lower returns than other investments, interest rate risk, and default risk. To invest in a bond, investors need to buy a bond from a broker or a platform that sells bonds and pay a commission or a fee. Some of the best bonds in the U.S. as of October 2023 are American Funds Bond Fund of America ABNFX, American Funds Tax-Exempt Bond TFEBX, and American Funds Tax-Exempt Fund of California XCAX, according to Morningstar. Number 7. Real estate. Real estate is a tangible asset that can generate income, appreciation, or tax benefits. Real estate is a property that consists of land and buildings, such as residential, commercial, or industrial properties. Real estate is attractive for investors who want to own a physical asset, earn rental income or capital gains, and enjoy tax advantages and leverage. However, real estate has some drawbacks, such as lower liquidity, higher maintenance, higher cost, and more regulation and responsibility. To invest in real estate, investors need to buy a property from a seller or a platform that sells properties and pay a commission or a fee. According to Doorloop, as of October 2023, some of the best real estate markets in the U.S. for 2023 are Austin, Phoenix, and Nashville. Number 8. Stocks. A stock is a share of ownership in a company that can appreciate in value or pay dividends. A stock is an equity security, which means that it represents a claim on the assets and earnings of a company. A stock is suitable for investors who want to participate in the growth and performance of a company, benefit from capital gains and income, and have more flexibility and control over their investment. However, a stock also has some risks, such as higher volatility, market risk, and company risk. To invest in a stock, investors need to buy a share of a stock from a broker or a platform that sells stocks and pay a commission or a fee. According to Investopedia as of December 2023, some of the best stocks in the U.S. are Apple, Microsoft, and Amazon. Alternative investments and cryptocurrencies. An alternative investment is a category of assets that are not traditional stocks, bonds, or cash, such as real estate, commodities, art, or digital currencies. An alternative investment is an unconventional and innovative option for investors who want to diversify their portfolio, hedge against inflation and market fluctuations, and pursue higher returns and growth potential. However, an alternative investment also has some challenges, such as higher risk, lower liquidity, higher cost, and more complexity and regulation. To invest in an alternative investment, investors need to find a platform or a service that offers this option and pay a commission or a fee. Some of the best alternative investments and cryptocurrencies in the U.S. for 2023 are Bitcoin, Ethereum, and gold.